Microsoft has announced that video game franchises from Blizzard Entertainment that captured the hearts of millions in China will soon be making a comeback under a new publishing agreement with NetEase. A number of Blizzard games were taken offline in China in January 2023 after the developer terminated the partnership with NetEase, citing disagreement over intellectual property control. The pair subsequently sued each other. Tension eased after Microsoft acquired Activision Blizzard in October, which was followed by changes in management. How do you think this will affect the biggest company in the world? Let's dive into Microsoft's numbers and conduct some analysis. Let's examine the revenue. You'll notice that up until 2016, the revenue growth was relatively slow. However, afterward we witnessed rapid growth with a compounded average of 13% over the last 5 years. When we break down their revenue, we observe that they generated $80 billion from Microsoft Azure, $49 billion from Microsoft 365, $22 billion from Windows 11, $15 billion from LinkedIn, $15 billion from Xbox, and $12 billion from Copilot. With 6 significant revenue streams each exceeding $10 billion, Microsoft's diversification is indeed remarkable. Their ability to excel and remain competitive in various sectors underscores their strategic prowess and adaptability in the ever-changing tech landscape. It's no surprise that they stand as the biggest company in the world, continuously setting the bar high for innovation and excellence across multiple domains. Satya Nadella's leadership has been crucial for Microsoft's growth in the last decade. He made bold moves like acquiring Minecraft, LinkedIn, GitHub, and most recently Activision Blizzard, expanding Microsoft's influence. But his biggest impact came from shifting the company towards cloud and subscription services. This change positioned Microsoft as a leader in innovation and growth in the digital age. Under Nadella's guidance, Microsoft transformed into a powerhouse in cloud computing, ensuring its relevance and competitiveness in today's digital world. Examining the company's net income, we observe Microsoft achieving an astonishing 34% compound annual growth rate over the last 5 years. This growth trajectory saw net income rise from $16 billion in 2018 to an impressive $72 billion in 2023. If we analyze on a per-share basis, we can witness the company's earnings per share, experiencing a staggering 35% compound annual growth rate over the past 5 years. The company's free cash flow, a crucial metric, has grown by 13% over the past 5 years. On a per-share basis, this growth is even more significant. Meanwhile, Microsoft's debt has steadily decreased. Notably, they opted not to utilize debt for the acquisition of Activision Blizzard, instead relying on their ample cash reserves. In summary, we have a company with exceptional leadership, generating tens of billions in annual cash flow, diversified across 6 main income streams, with double-digit growth in revenue, cash flow, and net profit, alongside decreasing debt. By my standards, this constitutes a high-quality business. According to Terry Smith, the 3 rules for investing are to invest in good companies, avoid overpaying, and do nothing. With Microsoft, we have established that it's indeed a good company. Now, let's evaluate its valuation. Before we continue, I'd like to clarify that I am not a professional financial advisor, and I highly advise against directly emulating my investment decisions. While I'm happy to share the past performance of my portfolio, it's essential to acknowledge that future outcomes are uncertain, and I cannot predict what will happen. Let's examine Microsoft's P/E ratio. Currently, the trailing P/E stands at 38, which may seem a bit higher than usual. However, it's not uncommon to pay a premium for a company with such solid fundamentals. It's worth noting that if the company reports higher profits in the next quarter, the P/E ratio will naturally decrease. This phenomenon is typical for growth companies, where part of the growth is already priced in and expectations are high. Moving on to a crucial valuation metric, the free cash flow yield, which compares the free cash flow generated by the company in the previous year to its market capitalization. In the last quarter, this metric stood at 2.35%. It's interesting to note that the peak occurred in 2012, and then began to decline after Satya Nadella assumed the role of CEO. This decline reflects the transition from a company with stagnant growth to one focused on growth under Nadella's leadership. Companies experiencing stagnant growth typically boast high cash flow yields, often resulting in elevated dividend yields. Consider AT&T as an example. Their current cash flow yield sits at an impressive 17%. This underscores their focus on consistent cash generation rather than aggressive expansion. According to Morgan Stanley, Microsoft's earnings are projected to double by 2029. This forecast hinges on the assumption that their AI revenue from Copilot, GitHub, and cloud services will experience substantial growth, reaching $120 billion in 2029. Additionally, Morgan Stanley has revised their price target for Microsoft upward from $465 to $520. If we open Stockpicker's forecast tab, we'll find that the analyst consensus expectation indicates high growth across various metrics such as revenue, income, EBITDA, and earnings per share. If we take a moment to review my portfolio, you'll notice that Microsoft has emerged as the top performer, delivering the highest profit among all my holdings. Given its stellar performance and promising outlook, I plan to maintain my position in this company, unless there's a substantial shift in my investment thesis, or if the fundamentals of the company start to deteriorate. As I've discussed in previous videos, I adhere to a long-term investment strategy, aiming to capitalize on the compounding growth potential of the companies I invest in over a period of at least 10 years. This patient approach allows me to weather short-term market fluctuations and benefit from the steady expansion of successful businesses like Microsoft. If you find value in my videos, I encourage you to subscribe to the channel for more updates and informative content. Thank you for tuning in, and I look forward to bringing you more valuable insights in the future. See you next time.